If you have not liked and subscribed, don't forget to like and subscribe. Click that bell button so that you get updated about everything, all my latest video. So today's topic is leaps. So I'm gonna cover pretty much everything you need to know about leaps. What is leaps? Why you should buy leap versus stocks, what are the advantages, what are the disadvantages. Kind of I'm gonna also talk about in the money versus out of the money, and we're gonna look into the Facebook. And I think it's pretty good time to get in Facebook. I personally grab some shares and also some leaps. So again, please make your own decision. I'm not a financial advisor, but just my experience, and I'm gonna talk what I know and what I kind of learned about leaps. So let's get started, right? So let's look at the chart for Facebook. Facebook has been kind of consolidating in this area, pretty much range bound from 240 to 50 to 270 to 90 to it went high, and it was kind of consolidating, and seems like it's kind of really kind of went down from this 277 level, and right now at almost 249 to 50. I actually grabbed some spread to some debit spread a month out, because I think this is right at support. If you look at that historically, last time it may go a little bit down like 45-46, but you can see that 45-46 has been a good support here. It acted as a support before, also it acted as a resistance, so the pretty major key area of support. And the other things, if you look at this is 200-day EMA, 200-day moving average, not the EMA, just the moving average. 200-day, it's right around right there, so kind of point of confluence where you have a support as well as 200-day. So I'm expecting it's gonna bounce back from here. If it's gonna go down, probably cut loss on the debit spread, but for the long term, I believe in the company. If you believe in a company, 200-day is a great time to add. So let's get started, right? So today's topic is not about Facebook, it's more about a leap. So I'm gonna do everything you need to basically know about leap. So we're gonna go to Robinhood, and kind of yeah, this is Apple. So basically look into the Facebook. So you can kind of pretty much use whatever broker. It's just in the web browser, so I just like it for demonstration purpose, but I have a lot of video on other browser too, other application as well, other broker too. So should be pretty straightforward. So let's get oh wow, I have 20. I didn't know that, but 55, 60. Okay, let's get started. So this is Facebook, right? So Facebook. So what is leap? Leap is an option which expired now 1 year or later, right? So basically you have options which expired monthly, weekly, but leap is basically an option which expired at least 1 year or more, right? So usually you can buy option up to 2 years. So right now the farthest you can get is January 2020 23. So this is 21, so 22, 23, 2 years. So usually 2 years out, right? So anything after today's date or next year will be leap, but you can look at the different price and kind of decide what you want. But why leap? There are few advantages, right? If you look at the short term, right, one thing is short term, it's really hard to predict where the stock's gonna, like, you can have, maybe let's say you got a call for a month, maybe Facebook will just stay in that price range for, let's say, 2 months, right? $2 up, $2 down, up down, up down. It just chop chop chop, you just lose your value. With the leap, theta is really, so for the option buyer, your theta is your enemy, right? So theta, basically you are losing that money if the stock doesn't move, right? And it's really hard to predict. You're buying a call because you expect a stock to kind of go up, right? So that's why you are buying. So leap. So let's look at maybe 2022, January 2022, right? So today is not, today is, I think, today is 13th, so January 21, 2022 would be a leap. So let's look at something, right? So there's two things. One is in the money, one is out of the money. So what is in the money? In the money is when you're buying a call, if the strike price is below the current price. For example, right now the Facebook stock price is 251.90, so anything below is in the money, right? So basically 250, 240, 175, 160 or whatever, right? You can even buy 60 call for Facebook, so those will be in the money, right? So what is out the money is basically, out the money is like anything above like 260, 270, 80, 290, you know, 300, those are out the money. You can get up to, let's say, 560, right? So this is all out the money. And farther you go, it's going to be cheaper. But if you go deep in the money, it gets expensive, right? The reason is being there's very less probability, like the chances of Facebook going to 560 is really less, right? So it can go definitely, like how Tesla kind of did. So it can definitely go, but the probability is less. That's why the premium is less, right? But if you get in the money, there's very high chance, like it will, at least like in the money you start making. And the other thing is like the value of option, right? The option price. So option price, right? If you get 250, it costs $39. If you get 260, it's got $35, right? So basically 251, right? 260 you paying 35, so a 260 call you paying $3,538. So this is time value only. There's no value. Basically, if the price remain 251.95 at the expiration, you'll just make 195 from here. So you paid like basically, I mean, if it's a if it's a 260, you do not make any money. It expired worthless. So you lost all your 35 $38, right? So though that's the time value is lost. But if you get the deep in the money, for example, if you look at let's look at 200, right? For if you get 200 call, it costs 68.38. So if you calculate calculator, so you paying for 200 call, you paying 68.38. So 68.38. But Facebook price is 51.95 minus 51.95. Oh, sorry, I did mistake. But basically 68.38 minus 51.95. So that's, so you're just paying $16 as a time value, right? So it gets expensive, but you're not paying a lot of time value, right? So that's the advantage of. And the other thing is, a lot of people is like, why? So if you think the stock kind of gonna go up, it's always, most of the cases, it's good to buy the leap. Why? Because in a leap, for example, let's say you want to buy, let's say, right, so leap, if you look at the delta, basically delta means for each dollar up you'll make $77 here. So basically this buying this leap is exactly as buying 77 shares of Facebook. But if you look at the price, how much 77 shares of Facebook gonna cost right now? Facebook cost 51.95 times, we'll make it 78, almost 78. So 78, so it's going to cost you 19,652 to buy 78 shares of Facebook. But if you get leap, you can see that you can get for 6,800, which is almost half the price, less than half actually, right? 714, so almost 1/3 of the price. So that's why leap is really a good way to, like, if you believe in the company, if you believe a little bit, it's gonna go up. So basically with the less buying power, you have more potential too, and each dollar up. And the other thing is, like, it's exactly same. A lot of people kind of says like it's safe, right? But think about it. Let's say you got 77 shares, right? So you're paying so much money, and on the other hand, you're paying so much money on one hand, and the other hand is like, if it goes down, right, if it goes dollar down, you lose 77. Same thing with the Greek, as I mean, same thing with the option too. Here, dollar down 77, dollar up 77. But the thing is, like, for stock you paid so much money, so you kind of held your capital more on the stock. So leap is really, but one thing is, you gotta be in deep in the money if you are kind of comparing with the stock. Otherwise what happens is, let's look at something else, right? So let's look at something out of the money. For example, 300, right? You paid 2,000, right? So you paid 2,000. So this is definitely, like, buying a stock here is definitely better. Why? It's because, so if the stock price never goes to 300, and if this stock, let's say it goes to like 260, 270, 280, whatever, less than this by expiration, it will be worthless, right? So that's the thing. So kind of covered like why leaps and what are the advantages and disadvantages, right? So one thing you got to look, so how do you choose a leap, right? So again, there's both advantage and disadvantage. If you go deep in the money, you definitely need more money. Usually I think you gotta pick something like out of the money but realistic price. For example, 300 probably looks reasonable for 22 or 23, so that's pretty fine. Why? Because you're getting cheaper, like it's $20, but this is all extrinsic value. But the thing is, like, you can give two or three of those, and the really good thing is, let's say Facebook goes to 300 or 320, you almost double the money right here, right? So in the other cases, like, you probably won't double because your premium itself is really high. For example, here, like 200, it costs $68. So if it goes $50 up, you probably make like 4 or 5,000, so not quite double. But here in this case, if it goes 320 or something, you actually can double, and even if it goes before, you can make a lot of money. For example, I probably uploaded a video where literally some guy got Tesla calls for $1,000 and turned into million in 2 years. Those are the leaps, right? But he got like far like this, like 560, and a lot of the times, like this will expire worthless, like most of the time. Yeah, it was like really ridiculous, the bull run for Tesla, and got lucky. But that's sometime it works, sometime it does not, right? So yeah, so now we kind of talk about leaps, so we're gonna talk about like how do you choose a leap, right? So one thing is always, one thing I've realized is, if you look at the numbers like 200, 250, 300, it's usually have a good volume. One thing you got to look for is a good volume. For example, let's pick up something 270, right? 270, if you look at the volume, open interest at 5,000, that's pretty good actually, that's really good. In volume, this is today itself 150, it's really good for leap. Actually, if you ask bid is a little bit wide, but it's after hours, so it could be really maybe market hour. Look into, you want to make sure bid ask is as low as tight as possible. And other things you want to look into, open interest and volume. For leap, this is really great, right? Open interest of 5,000 is awesome, and volume is really good. So wow, Facebook has a quite a leap. Okay, and if you look at the 300, wow, look at that, volume itself was 599 and open interest is 16,000. So this is a good leap. So you want to look into those, like let's say some weird like 370, okay, zero volume, 5, it's fine. But some other stock, maybe it's great, but Facebook, you had a lot of other good options, right? So those are the things, right? Maybe you look in 350, you probably see decent. Wow, 350, you have 2,000 there, and open interest is 25,571. So you can kind of look into those. And today is just kind of down 0.45%, change was 0.05, so not really. And yeah, this is ask bid, look at the ask bid, 11 and 11.20, that's really good, right? 11 and just 20 cents, so $20 still, but for leaps that's kind of standard. But look at that, 350 has 25,000 open interest, that's a really good. So you want to look into the volume, good open interest, right? So if you get those are kind of pretty important. Other things I feel is look into something where realistic you think it's gonna go. A lot of people are always fixated is like can you sell leaps, right? Like, so the thing is, like, any option contract, you don't need to hold it, you can sell it at any time you want, you don't have to hold it till expiration. For example, Facebook goes $50 up, let's say tomorrow Facebook go 10 or $20 up, right? So this one probably 10 times you will make about 240 or $300, right? If it goes $10, you will make 250. If it goes $20, you'll make about $500. So you can sell it the same day if you want, right? You don't have to wait till expiration. Of course, if you are still bullish, you can hold it, but you can always sell it out. And the other question is, a lot of people is like how to make money with the leap. The thing is, like, if you have a leap, but it has to be in the money, right? If it's out of the money, you do need to pay some collateral. So for example, if you have a leap anything, so for this week, if you have a leap anything above anything below 250, right? Let's say you already own 250 leap, right? Which expires in 2022, right? So what you can do is you can keep that leap as in collateral, right? Leap as collateral, and you can make a vertical, or you can make a debit spread, or whatever you want to. So basically it acts as a, you are having 100 shares, you can sell weekly and make some money. For example, let's say you already bought 250 leap for Facebook. So what you can do is, let's say you can go, this is 15, let's say 22, right? You already have 250 leap. Now what you can do is you can actually sell call weekly. So you gotta, you want to make sure something where you don't think Facebook gonna go, for example 260, right? So if you sell this, you'll make $275 in 2 weeks, right? So if the Facebook stays below 260 by January 22, you collect $270. So that's pretty extra money. If you're lucky and if you keep doing that for 1 year, you can literally make your leave free, so if it expires, let's say Facebook is 259 by maybe January 22, you collected $300 almost, then at that time you sell another call, which would be probably increasing, since it's already 260, you sell 270, 280, whatever it is, and keep collecting. Again, it works. Sometimes let's say sometimes what happens is Facebook goes above 260. So what happened at that time, one thing you can do is you can buy back this call. For example, if it's Facebook is 261, it will probably, you're gonna probably lose $100 at expiration, right? You can always, you sold this call, you buy back, then you are done with it, right? A lot of people are like, oh, is my leaps gonna call away or whatever? No, usually what happens is sometimes Robinhood will liquidate, meaning just sell this contract, and sometimes some other broker, what they're gonna do is they will make your shares negative 100 shares, right? That means basically you'll have you'll have negative 100 shares at 260. You have to buy back. So if it stocks go up, you will start losing money. For each dollar up above 260, you start losing $100. So usually what I do is basically, if it tries to go, I mean, I have a, for example, I have this and I have 260. If it tries to go 160, I'll just buy back, close it out, right? I'll do that, I'm done with it, right? Sometimes I feel like there are some weird things, like it went too up and I believe it's gonna go down, I will roll it over. What I roll it over basically means is like, I will buy this back and sell maybe same call or a little bit up for next week. That way I have enough room, right? So there are a lot of strategy, and if you want to know more about those strategy and how I do, you can always kind of check out my course, the Option Bible. Link is in bio. Kind of I cover pretty much everything. I'm explaining here leaps and how I do that, and different other strategy, kind of make a slow money, consistent gain. If not, everything is in online free YouTube. Don't forget to follow me. But that's it for today. If you have any more question, let me know. Thank you and have a great day. Thanks.